Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. The most eagerly anticipated Fed meeting in years. The dollar weakens as traders debate the size of today's rate cut with a near 50-50 split on a bigger reduction. UK inflation data due later today, a crucial reading before the Bank of England's own rate decision tomorrow. Plus, Lebanon blames Israel for a mysterious exploding pager attack that killed several people and left almost 3,000 wounded, raising fears of an escalation. You can almost feel the anticipation then across these markets as investors hold their breath ahead of that Fed decision. As we've said, the expectation, of course, a cut, but the size, the statement will be important, and, of course, the dot plots, the forecasts coming through as well. All of that will be scrutinised in terms of the path ahead for this Federal Reserve, the implications as well for the US economy, but globally as well, as we look at flows moving into some parts of EM already on the back of this. European futures currently down 0.1%. It was a mixed day yesterday on Wall Street. FTSE 100 futures currently pointing lower by 0.3%. S&P futures currently flat. Nasdaq futures also in similar territory, just up by 2 points at this stage. Let's flip the board and look cross-asset then. The work has been done at the front end of the yield curve. 40 basis points is the yield move lower on the 2-year since the end of May. And you're seeing a little bit of softness again in terms of the yields lower in the session. But anticipation, of course, around that decision. 359 right now on the US 2-year, the most sensitive part of the Treasury curve. Euro dollar at 111, getting a lift again from softer dollar once again. Strength coming through for the single currency. $73 a barrel on Brent, down 0.6% in the session. We keep an eye, of course, on the geopolitics of the Middle East, and gold at 2,569, still near those record levels, and again sensitive to the rate decision. Let's cross over right now to Min Lo, who's standing by for us in Hong Kong for a check on the Asian markets. Min.
Yeah, it's still all about the Fed today, right? Even here in Asia, the Asian market's not doing a whole lot here today. The benchmark is down 0.2%, and the Nikkei, it seems like, is struggling to find direction a little bit because this morning it was up about 1.3%, and now it's somewhat flat. And it seems like, we're watching the yen very closely because we did see the dollar pop overnight and a weakening of the yen. But then after Japan came back from the lunch break, we did see again the yen reverting back to that month-long downtrend again. And I guess that's filtered through a little bit to the equity markets as well. Let's flip the board and look at the Chinese markets. We're coming back after the 2 days, the 3-day public holiday, the Mid-Autumn Festival, and a lot to catch up on because we did have that very weak macro data coming out over the weekend, and you had Typhoon Babinka barreling straight for Shanghai, but it seems like the Chinese markets weren't reacting too badly to the news. The CSI 300 now down 0.2%. The Shanghai comp, we're watching very closely if it takes out the lows in March 2019. I believe we are about 1.5% from there, and it seems like investors are still unclear whether that weak data would mean more aggressive stimulus policies from the Chinese government. We're watching the 10-year yield, of course. It's still pointing downwards. We're watching whether it would take out that 2% target despite the PBOC continuing to take measures to stem that rally. The fix was set at the strongest level year to date so far. It's now at the 709 handle. Let's flip the board, take a look at the sectors to watch. Chinese chip stocks are rallying up 10% for Changchun, and that's on the back of news that China is claiming to have made breakthroughs when it comes to its homegrown semiconductor equipment, taking a step to overcome those US sanctions.
Yeah, that is a crucial story and potentially a read across as well for the European markets. Min Lo in Hong Kong, thank you very much indeed with the check on the Asian markets. Now, traders, of course, continue to debate the size of the Fed rate cut expected later today. As we've mentioned, Double Line Capital's Jeffrey Gunlack says he is betting the Fed will cut by 50 basis points. Ray Dalio from Bridgewater says a 25 basis point cut is, quote, the right thing to do. Former New York Fed President, though, Bill Dudley reckons 50 is the way to go. And here's what JP Morgan CEO Jamie Dimon expects.
It matters to me because I have to listen to all that people yapping on TV all the time about something that's almost irrelevant. I mean, they're going to do it, 25, 50 basis points. It's not going to be earth-shattering. It doesn't mean that much. I mean, I think they need to do it. So I'm not, I think Jay Powell does do a great job, but it's a minor thing.
It's just a minor thing. It's just a Fed cut. We're just going to continue the yapping on TV right now and bring in MLive strategist Mary Nicola, who's going to raise the yapping to a new level. Mary, thank you for joining us. What do you make of this debate then? 25 or 50? Or is the statement and the forecasts, are they going to be more important ultimately than whether or not they go 25 or 50?
Yeah, I think so. As Jamie Dimon put it, 25, 50 basis points, does it really matter? I think what matters is just how they lay out the future trajectory of where rates are headed, and that's going to be absolutely crucial. So, of course, where the dot plots are, remember last time we had the dot plots, they were forecasting only one rate cut this year. Obviously, that's going to change quite substantially, but it's about where they're headed. And of course, the market's going to overextend and get excited that if they're forecasting, let's say, 2 cuts, they're going to go 3. And of course, if they go 3, they go 4. So there's always this overextension, overexuberance by the market for more Fed cuts. But at the same time, I think the key thing is just where the U.S. economy is and how it's holding up. And yesterday's retail sales data showed us that the U.S. consumer is holding up quite well. They're resilient in the wake of all this. So the combination of any sort of cuts while the economy is holding up really well is actually a good thing for U.S. equities.
Yeah, we saw some evidence of budgeting, though, didn't we, in those retail sales numbers, with Bloomberg Economics suggesting it does make the case for a bigger cut, potentially from the Fed. What is the ripple across, do you think, Mary, from this cut that we're going to get later today, 25 or 50, for the world of EM?
Yeah, so when it comes down to it, if you look at some of the bigger size cuts over the last few cycles, the bigger size cuts really were often accompanied by some sort of weaker data and some sort of signs of a recession coming through from the U.S. Let's say take 2007, and that was a sign of a bigger thing to come. The thing about 2007, though, was we had the resilience of China, which actually bolstered the EM, and if you recall, we were in the midst of a commodity super cycle as well, thanks to China. The fact is that if there is a slowdown in China, which we are already seeing, and then we see the U.S. economy slowing down as well, that is a significant headwind for EM. But if we see that the economy is holding up in the U.S. and that we're not seeing a deterioration in demand and the Fed is easing, then that is a positive for emerging markets.
OK, Bloomberg MLive strategist Mary Nicola with a fantastic setup on a crucial day, of course, for this Federal Reserve and what to focus in on, with the implications, of course, for broader equities and asset classes beyond the US. Stay with Bloomberg, of course, for continuing coverage of that all-important Fed decision. A Bloomberg surveillance special, The Fed Decides, starts at 6:30 p.m. London time today. Now, Iran-backed Hezbollah is accusing Israel of orchestrating an attack that killed several people and left almost 3,000 wounded across Lebanon. A string of medical emergencies were reported across the country following the mysterious explosion of thousands of pagers. For more on this, our Horizons Middle East and Africa anchor Jumana Pasechi joins me with the details. Jumana, a fast-evolving story, remarkable story. What do we know at this point? What are the details?
Yeah, absolutely. So what we know is at around 3:30 p.m. local time yesterday, 3,000 of these handheld pagers held by group members of Hezbollah all went off simultaneously. They exploded simultaneously, resulting in casualties of around 2,800 people, of which 200 are in critical condition, according to the Lebanese Health Ministry. 9 people, including a child, were also killed, according to the health minister as well. Local Iranian media also saying that the Iranian ambassador ambassador to Lebanon was also harmed, even though he is recuperating well. Now, there were chaotic scenes at hospitals with ambulances flooding in, and most of the wounds were sustained at the level of the waist. Many of the victims would have lost their fingers. They have also been hit in the eyes and the hands. Very bloody scenes being circulated on social media. Many Lebanese, of course, shocked and shaken by what had happened, an unprecedented and broad-scale attack. And per Hezbollah spokesperson, this is the largest security breach the group had ever seen. Hezbollah themselves were quick to point the blame at Israel, saying, we hold the Israeli enemy fully responsible for this criminal aggression. Those were later backed up by comments from the Lebanese Prime Minister Najib Mikati as well, also laying the blame on Israel. Israel themselves have declined to comment. They have not said anything about the attack that took place yesterday. But then obviously one of the other questions is, why were Hezbollah operatives using pagers in the first place, Tom? And this goes back to a speech that Hezbollah chief commander Hassan Nasrallah gave back in February, where he warned Hezbollah members to not use their mobile phones because of the possibility of them being intercepted. So since February, they've been moving away from using mobile phones and relying more on this more basic technology, which is pagers.
What do we know, Jumana, then, about how these pages were compromised? And folding in another question as well, how is this likely to expect or at least impact negotiations on the ground, or at least that conflict right now between, of course, Israel and Hamas in Gaza?
Yeah. So lots of questions going around about how this could have happened. Al-Akhbar, which is a news outlet closely associated to Hezbollah, said that a new shipment of pagers had just arrived in the last couple of weeks. And therefore, this raises the possibility that the new pagers themselves had been compromised at some point in the process. Now, the official line from the telecommunications minister is that the batteries had overheated, but we spoke to some cybersecurity experts and they say that is extremely unlikely. The other hypothesis was that at some point during the supply chain, the pagers could have been tampered with, but again, unlikely given that it would have been very difficult to do that at scale. So the most likely as a reason for these devices to have been compromised was at point of assembly. And what we heard this morning is that the Taiwanese manufacturer behind the technology in these pagers has denied that they had anything to do with the actual manufacturing, and that in this situation, they were actually put together by a European distributor. So still a lot of questions. In terms of what it means for the broader war, of course, Israel are now on the defensive. We've got a new front opening up. It has now moved from a hot war to a cyber war. And this is coming on the heels of Israel themselves saying yesterday, Netanyahu saying that a new front, a new objective has opened up as far as they are concerned. And that is that they want to resume the security in the northern border and allow Israeli citizens to return back to the north. So there is increased amount of attention of what is happening on the Lebanon-Israel border now.
Jumana Pasechi, Horizon's Middle East and Africa anchor, with an important update, of course, on that evolving story. Jumana, thank you very much indeed. Here's what else to be thinking about the day ahead then. Switching focus to UK economic data, 7 a.m. UK time. We're going to get the inflation print, CPI. It's unlikely to move the needle. That's the expectation, at least, for the BOE. But maybe it will feed into discussions. That data dropping in around 45 minutes' time. At 10 a.m. UK time, we're going to get Euro area August CPI, so the final reading of inflation out of the Euro area. We'll break that for you as well. And at 7 p.m, drumroll, it is that Fed rate decision. And of course, we will have full live coverage and analysis of that event. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Subscribers to the terminal can go to DAYB Go for the analysis on that story. The focus, of course, on that story around the pages, of course, in Lebanon and Hezbollah, but also, of course, a deep dive on what to expect around the Fed. Coming up, gold edges higher, trading close to a record high. We break down the rally. To what extent is this upside for gold sensitive to moves around the Fed? Is there further to go? We bring you a breakdown of what is moving gold. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, gold is up around 25% year to date. Currently in the session down about 0.1%. Sensitive, of course, to this upcoming Fed rate cut and any guidance. The statement, of course, and the forecasts. Gold could be volatile around this. Goldman Sachs thinks it could move a bit lower if they only go with 25 basis points. But Goldman Sachs still sees a target. They're targeting 2,700 for the yellow metal by the first quarter of next year. For some of the factors driving the upside that we've seen in gold, let's bring in Sibylla Gross then from Bloomberg with a deep dive on the yellow metal. Talk to us now, Sibylla, thank you for joining us, about how gold is positioned and how traders are positioning in gold leading up to this Fed meeting.
Hi, Tom. Well, it's pretty incredible. We're nearly at 2,600 and we haven't even had a cut yet. So whatever the Fed decides to do will be extremely important. And look, there is a risk that gold faces a little bit of a wobble if the cut isn't as big as some people in the market are expecting. But I think what traders will really be focused on is the language, right? We've had this shift in language from Fed officials to focus on some softening in the labor market, which is quite different to the inflation battle topic we've been hearing for the last 2 years or so. So that's going to really impact and feed into market expectations for rate cuts for the remainder of the year. And that naturally feeds into gold.
OK, so the rate cuts is certainly part of the story. What else is supporting gold?
I think one thing that we will see supporting gold soon, and a lot of banks are expecting this, is big inflows into gold-backed ETFs, which strangely for this rally have been almost completely absent. So once the opportunity of cost of holding gold comes down, as interest rates come down, plenty of banks are expecting investors in the West to start piling into these ETFs. It's one of the easiest ways you can get exposure to gold. And, you know, we're heading into a US election season. I don't have to tell you how volatile it's already been. And gold is seen as a traditional safe asset. So it's got that appeal there. And I think some investors really are worried about this, these softening numbers in the labor market. It's hard to sort of not look at them and get slightly concerned about a recession or wonder if the Fed is really going to pull off this soft landing. So that's why some investors are also turning to gold. I think we've seen the structural supports that we've seen for the last 2 years, including a lot of strong demand from central banks. That hasn't gone away. And in fact, there's room for that to grow as well. So it's looking pretty positive for gold. I'd say the one headwind we may be facing is positioning is pretty long for COMEX gold futures, but we've been here for some time. And if anything, any dip in the price, we've seen investors come back in to buy.
OK, so there's that long positioning, but maybe investors are still on the sidelines or at least willing to buy any dips. What is the outlook for the remainder of the year then, Sibylla, before we let you go?
Well, I think that, cocktail of factors there is largely pretty bullish for gold. I think most banks are looking at numbers similar to Goldman with that 2,700 figure by the first quarter. We've even got Citibank calling for 3,000 by mid-2025. So gold's pretty hot right now.
Wow. Did you say mid-3,000 by 2025?
3,000 by mid-25, yeah.
3,000 by mid-2025. All right, Sibylla Gross, fantastic breakdown of what's been happening in these gold markets and projecting out, of course, all the way to 2025. Sibylla Gross in Melbourne, thank you for the analysis. Coming up, as we count down to the Fed's rate decision, why investor Ray Dalio, heard of him, says a 25 basis point cut is, quote, the right thing to do. That conversation is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Wednesday. Now, markets are pricing a slightly higher than 50% chance of a half-point rate cut by the Fed. Today, Bridgewater Associates founder Ray Dalio told Bloomberg's Linda Armin the overall picture of the US economy warrants a smaller move.
25 or 50, it doesn't make a difference. I think that's the problem with the news cycle and all of this. They're losing sense of the bigger picture. Okay, Fed policy. What does the Fed have to do? Fed has to keep interest rates high enough to satisfy the creditors that they're going to get a real return without having them so high that the debtors have a problem. So now if we're looking at this, whether it's 25 or 50 basis points, 25 basis points is going to be would be the right thing to do if you look at the whole picture as a whole. If you look at the mortgage situation, which is worse, and that affects more people, then it's probably 50 basis points.
What is the state of the U.S. economy? I mean, we're talking about 25 or 50 based on the assumptions of how the economy is doing.
Okay.
From the data that we've gotten so far, does it justify 50? I mean, what does it say?
We have a model for estimating what should be. The economy right now is very, very, very close to an equilibrium level in many ways if you're just looking at what is and you're not looking at the debt problem. And it would look like there should be a modest easing of interest rates and a move gradually to a more positively sloped yield curve, what we would call normal. It's fairly normal, except it's not normal in the way that it's so skewed. So if we look at the markets and we look at the way the population's income levels are for the various sectors, if you look at the bottom 60%, if you look at the politics, the left and the right, and the nature of what is going on, the two worlds that we live in terms of that, the economy and the values.
That, of course, was Bridgewater Associates founder Ray Dalio speaking to Bloomberg's Haslinder Ahmed. Now, some other stories making the news today. Senior US and Chinese economic officials are expected to meet this week in Beijing. That's as the Biden administration seeks to confront China over alleged industrial overcapacity. The US delegation includes officials from the Treasury and Federal Reserve Board and will be led by Treasury Undersecretary for International Affairs, Jay Shambaugh. Donald Trump says he will revive a state and local tax deduction that he capped during his first term if he is re-elected US president. Capping the so-called SALT deduction had a disproportionate impact on regions with higher taxes and property values, typically dominated by Democrats. And the Democratic presidential nominee, meanwhile, says she wants to cap childcare costs for working families at 7% of their income. It's the first time Kamala Harris has spoken publicly about the initiative as she seeks to assure voters a Harris White House would address cost of living concerns. And, of course, we continue to cover the unfolding US election contest leading up to November. Let's check in on the markets, though, because the focus today, obviously, front and centre, is this Fed cut decision, 25 basis or 50. Will there be adjustments significant within the statement? And what will the updated forecasts, the dot plots, signal as they look out 2024 all the way to 2027? European futures currently down 0.1%. FTSE 100 futures off by 21 points, pointing lower by 0.2%. Of 8%. And over in Germany, DAX futures pointing lower by 36 points. Let's flip the boards and have a look at how some other asset classes are adjusting around this. You'll expect investors will largely be sitting on the sidelines until we get clarity in terms of that rate decision coming through this evening, UK time. A lot of money has been moving into US Treasuries. Two-year yields are down 40 basis points since the end of May. Currently down just 1 basis point, 359. Our Treasury's looking a little too rich at this point. That is a view from some, at least. The benchmark 10-year is at 363, largely unchanged in the session. Coming up, the Bank of England will decide on rates tomorrow. Prior to that, though, we're going to get inflation out of the UK. It drops at 7 a.m. UK time. We're going to set you up with what to expect around UK CPI. Stay with us. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. The most eagerly anticipated Fed meeting in years. The dollar weakens as traders debate the size of today's rate cut with a near 50-50 split on a bigger reduction. UK inflation data due later today, 7 a.m. In fact, a crucial reading before the Bank of England's own rate decision tomorrow. And Lebanon blames Israel for a mysterious exploding pager attack that killed several people and left almost 3,000 wounded, raising fears of an escalation in the region. Let's check in on these markets then as investors wait, of course, with bated breath. You can almost cut the tension with a knife leading up to this Fed decision. Fully expected to cut, of course. The size of the cut important, as will be the statement from the FOMC and the revised forecast, or the dot plots, as they push out with their views all the way through to 2027. European futures currently down 0.1%. FTSE 100 futures leading up to the CPI print, which we'll break down for you shortly, currently down 0.3%. S&P futures, after a mixed session on Wall Street yesterday, currently flat. NASDAQ futures as well. Flat as a pancake, pointing up just 3 points at this stage. Let's look at US Treasuries, the dollar and gold right now. Flip the board with a focus also on the oil space. You did see a move higher in oil yesterday on the back of the news out of the Middle East. That has since ebbed a little lower. Currently, you're looking at Brent down 0.8%, $73 a barrel. On the front end of the yield curve, though, the focus on the 2-year, the sensitivity to this expected Fed cut, 359 basis points, yields down 40 basis points since the end of May. Money has moved in across the curve, 359 on the 2-year. Euro dollar getting a bit of a bid on the back of softer dollar, 111 currently on the single currency. Gold at 2,566, still close to those record highs, just down 0.1%. Now, the Fed is widely expected, as we've mentioned, to lower rates, of course, today. But by how much is the question, at least for many out there. Markets are pricing in more than a 50% chance of a half-point rate cut. Garfield Reynolds leads our Markets Live coverage in Asia and joins us now. Garfield, for you and the team, where is the focus? If you had to choose one, would it be the decision around 25 or 50? Would it be the statement, or would it be the revisions, the forecast, the dot plots?
Well, I think in many ways it is the decision. Do they go 25 or 50? If it comes to the dot plots and all the rest of it, I mean, that's going to come in the context of if they go 25 basis points, which a lot of people, including I shade this way myself, think that would make more sense considering what's still a fairly robust looking economy. If they do that, then that's going to face an enormous amount of pushback from the market. So that's going to, and you can't kind of imagine a world where, they cut by 25, but they show they're open to cutting by more in the not too distant future. So that reassures markets. I'm not buying that. If they cut by 25 rather than by 50, they have to sell the message that, look, we see a soft landing coming and that we're on target for it. We don't see the need for 50 basis points. And that's going to be a real shock for markets, rate markets at least. They're busy pricing for not just one 50 basis point cut, but two of them at least over the 4 meetings, through to the first one next year, January. So they see a very strong pace. And in fact, the way that the market's set up, they're basically saying if the Fed only cuts 25 basis points today, then they'll have to cut 50 in November. So if the Fed was going to cut by 50 at some stage, it would cut now. That sets up that conflict between the market and the Fed if it goes 25. If it goes 50, then there will be some focus on, what the statement says, how much danger there is out there of a recession. But that's going to be ultimately, I would imagine, I'll probably be wrong the way that all this has been going on, but if they cut 50, there's less likely to be a lot of turmoil, at least in the initial post-Fed, market setting.
Yeah. Well, I wonder if they were to go 50, whether there'd be turmoil in Japanese equity markets or whether that is already being priced in. And that takes me to a question about the dollar, Garfield. How much is priced in to the dollar? What is the dollar pricing in? We're seeing another down day for the greenback.
Yeah, although, the greenback had, a bit of a bounce yesterday. I think the greenback is a little bit more finely balanced in a lot of ways than the Treasury markets are, but that's partly because the greenback, there's influence there of what goes on outside of the shores of the US, and I think there's a fairly strong anticipation that if the Fed does go 50 basis points, that's going to free a lot of other central banks to go harder, and it might also, for example, talking about Japan, I would think that would be a spur for Ueda to be more circumspect about any hawkishness that the BOJ might feel, because I don't really think the BOJ wants to see the yen motoring down towards 135 per dollar in the short term. And they would also arguably be taking a look at what does go on in the wake of the Fed move, and to what extent a stronger yen is a headwind for their efforts to rein in the Japanese economy. Sorry, that's the wrong way around. To what extent what's going on with the yen ends up acting for or against what they want to do with rates.
OK, Garfield Reynolds, who leads our Markets Live coverage in Asia, with a reminder of the global ramifications of this Fed decision later today. And certainly Japanese assets are sensitive to that. Garfield, thank you for the setup. Coming up later, a Bloomberg surveillance special. It is the Fed Decides. You can catch that programming 6:30 p.m. London time. And after the Fed Decides, attention, of course, will turn to the Bank of England. A hold is widely expected when it meets tomorrow, defying pressure from a growing cohort of investors calling for more aggressive action. Will it be key to the decision? Will be UK inflation data due in the next half hour or so. Our UK correspondent Lizzie Burden is with me for the details. Talk to us about the inflation print. Is it key, really, Lizzie, or is the decision already been made essentially within the MPC about this decision tomorrow? Could inflation data today really move the dial?
I'd say a downside surprise on inflation and a 50 basis point cut from the Fed could move the dial for the Bank of England, even though, as you say, at the moment, economists and markets don't expect the Bank of England to do anything but hold. There are some strategists warning that because of the growth risks, the BOE needs to step up its monetary action, but that's not the general consensus. You can see here on the screen the expectations for these inflation numbers. So at the headline level, it's seen staying at 2.2% in August, but at the core and services level, it's seen rising. And public service announcement here: do not panic about that services spike, because it's likely to come down to base effects, volatile airfares, hotel prices again. And the BOE, of course, penciled 5.8% for services for the month of August when it cut rates before. So there is a fair amount of wiggle room here around it. As I say, what could really move the dial is the Fed. If it goes for 50 basis points, you have seen traders stepping up their bets for a move from the Bank of England tomorrow. A 50 basis point cut would do more on this, because it comes back to sterling. If you have a stronger pound, and it's already near its 2023 high, it would make the BOE, it would give it a hard time avoiding moving, because a stronger pound would act as a bigger brake on growth. OK, so a combination of 50 plus softer inflation today could move the dial for the BOE. We will see how that unfolds. The truth about the services story, clearly, is the globe-trotting of Lizzie Burden, all those flights she's been buying this year. Lizzie, thank you very much indeed. Our UK correspondent Lizzie Burden breaking down what to expect in terms of UK inflation and how that ties into the BOE's decision tomorrow. Now, the European Commission, President Ursula von der Leyen has drawn the battle lines. They really are battle lines, in a political sense at least, for her second term in office, unveiling a top team which she hopes will make the EU more competitive. The new lineup includes key roles for commissioners from France, Spain and Italy. Bloomberg's Oliver Crook joins us from Berlin with all the details and has been following, of course, the palace intrigue within Brussels. Take us through then, Ollie, the lineup. Who holds the keys to power right now?
Yeah, Tom, as you mentioned, there's so many roles, so much information we got out. We really got to cut through the noise and try to figure out what this commission actually looks like. And critically, Tom, who holds the power? Because the EU and all politics really is all about the stick and carrot. And really the sort of main takeaway is Teresa Ribera, the nominee from Spain, which was given this sort of new commission, which is both competition, i.e. the old one that was held by Margrethe Vestager, already one of the most powerful institutions in the EU, particularly on the stick front, because this is the commission that can dole out, billions and billions and billions in euros worth of fines and do it sort of unilaterally without having to deal with member states. But also competitiveness was also folded into that portfolio. So also really sort of the anchor of the sort of Draghi report, trying to get Europe to be more competitive and doing so. And again, this is part of her background as a commissioner and having worked in Spain in a carbon neutral way. So that really brings together a lot of portfolios, a lot of responsibilities, arguably maybe too many. Attached to that also is you're going to have from France, Stéphane Séjourné, the former foreign minister from France, the last-minute swap out from Thierry Breton to give a little bit more power to France. We understand Macron did that. And this is the sort of competitiveness, but looking more at the sort of banking side, trying to create prosperity and really guiding an industrial policy from Europe going forward. We also got from Italy, and this is sort of an interesting portfolio. This is the cohesion policy. Sounds a bit abstract, but again, we talk about sticks and carrots. This is a job that went to the Italians from for Maloney an executive vice president role. And the reason this is significant, Tom, is because we have 400 billion euros worth of money and budget that goes and is dispersed by this to deal with cohesion within Europe, but also development within Europe. And of course, from Estonia, Kaja Kallas, who's going to be the foreign minister, we knew about that for weeks to come. So these are really going to be sort of the main protagonists for us as we watch this new commission develop. The next steps here, Tom, they will deliberate about this in Parliament. They may send a couple of these names back at a certain point, but then they vote on it, and they're really hoping to get all of this new government in place by the 1st of November.
OK, so it's not yet signed and sealed. You talk about cohesion. There is arguably less cohesion across Europe right now than there has been, at least in some spaces, for a long time. How does von der Leyen, how has she structured this setup then, Ollie?
Yeah, so what's interesting, Tom, is she's changed kind of the whole setup here. So there previously were executive vice presidents, then vice presidents, and then commissioners, all this sort of thing. She said basically no more vice presidents. We're doing only executive vice presidents. Instead of 3, there are now 6. And then she's also tried to skew the gender balance because she didn't get all the female nominees that she wanted. So what she has done is 4 of these 6 roles are held by women, though the skew is mostly male. What she's done is she's sort of empowered, given more power to the fewer women that are sort of going into these new jobs. What is interesting, Tom, is that's the structure. There's also a spirit behind this, right? What she wants to be the fundamental spirit behind this is the Draghi report and competitiveness. And when we think about the committees and the jobs that are going to be in charge of that, the sort of so-called Draghi committees, if we can call them that, it's going to be really the French and the Spanish working together, as we had mentioned a little bit earlier. But also within there, also, Tom, in the structure, what's interesting, there is still a job for trade that reports directly to von der Leyen. That is going to be held by Šefčovič, who previously held the Green Deal job. And then also about economy, prosperity, but also simplification of the EU. That's going to go to Dombrovskis. That'll be a direct report to von der Leyen, though it's not an executive vice president role. So again, we're going to watch this all sort of trickle down over the next couple of weeks. But really at the center of this commission, Tom, is getting Europe competitive so it basically doesn't, as Draghi's warned, sleepwalk itself into obsolescence.
OK, Oliver Crook in Berlin. No one does it better in terms of breaking down the politics of Europe and how it sets things out, the importance and the implications. Ollie, thank you very much indeed. To other stories making the news this Wednesday, Bloomberg has learned that the German Finance Ministry is still planning to sell off its entire stake in Commerzbank, despite a surprise move, of course, by Italy's UniCredit to buy all the shares offered last week. An influential labour union has put pressure on the German government to prevent a takeover by UniCredit, but we understand Germany intends to sell its stake at the best possible price, even if that means UniCredit buys more shares. Bloomberg understands Continental is pushing ahead with preparations for a spin-off of its struggling car parts business. Sources say the German company has invited investment banks to pitch for a role on the planned listing. Continental shares plunged last week after BMW disclosed the spiralling cost of a recall affecting 1.5 million vehicles due to faults with their Continental braking systems. Coming up after Bitcoin's biggest intraday gain in more than a month, we are live at the Token 2049 conference in Singapore. What have attendees been saying about the Trump trade around crypto? Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Bitcoin has paired a rally that was spurred by expectations of that Fed rate cut, of course, coming through later today. The largest digital currency traded near $60,000 yesterday after making its biggest intraday gain in more than a month. Let's get more with Bloomberg's Annabelle Drulers, who joins us from the Token 2049 conference in Singapore, speaking to a number of the big movers and shakers within the crypto space. Annabelle, what are the general themes then of this conference?
Well, Tom, this is the biggest cryptocurrency event of the year that takes place in Asia, and this year at Token 2049, I just want to give you a bit of a scene setter here. There's a climbing wall behind me. There's people lining up to see the football icon Fabio Cannavaro. I've seen an ice bath outside. If you can hear the music, it really feels like we're in a club here. So that just points to the level of bullishness that we're hearing on the ground. It's certainly an indication. But of course, this year in crypto, it's been sort of anything but that bull case. We've seen really the industry struggling for a narrative. There was all that optimism that came off the back of spot crypto ETFs launching. But then past that, we've seen sort of projects around tokenization, around AI, around gaming, nothing's really stuck just yet. But at the same time, of course, it's that question of what's the macro doing, and this is really the talking point now. If we see that Fed move, if 25, 50 basis points, does that start to drive demand for speculative assets once again, and will that bring investors back into this space?
Trump has been leaning in to the crypto space, Annabelle, in a big way. Him and his team have been pushing into Bitcoin. They've been trying to make a play, clearly, for those who have assets and exposure to crypto. Is the US election having an impact? Is it being discussed? Are people talking Trump and crypto?
Yeah, absolutely. I mean, of course, President Trump or former President Trump is seen as someone who's been a lot more friendly to the space. It's actually interesting when you think about what's happened over the past few years, and really the understanding or the feeling, I guess, by many in the crypto community is that President Biden's administration has not been overly supportive. I mean, we haven't really seen any sort of regulatory clarity coming through in the US, and that's, again, really drives, or what would drive, institutional adoption. And then at the same time, you've got Kamala Harris and the expectations around what she would do. Someone else who's here is Anthony Scaramucci, who's someone who's been quite a proponent of Harris becoming the next president. And he's saying that she would take perhaps a more pragmatic approach. But generally speaking, I mean, most in the crypto industry would say that President Trump going back into the White House once again would be a more positive move for the sector. And in the past, of course, he said that Bitcoin was a scam against the dollar, but he's certainly changed his tune. I mean, we've seen him appearing at crypto events. He's even licensed his image for NFTs. This week, the Trump family also announced a new decentralized or DeFi project in the works as well. He said that he wants to put the US as sort of the crypto capital of the world. He's saying if they don't do it, someone else will. So again, yes, certainly a lot of eyeballs on the results of the US election, and really just a few weeks from now.
Annabelle, what are we hearing about the fundraising environment? I wonder if that's being shaped by expectations around Trump. Is the fundraising for crypto starting to pick up? What are you hearing from investors?
Yeah, fundraising is an interesting one because it's certainly been challenged. I mean, there was a lot of capital being raised just a couple of years ago. It was also being deployed. That's certainly changed somewhat. I've spoken to a couple of different VCs here today, and again, what I'm hearing is that the environment is starting to improve. It's interesting when you think about the valuations, and what I'm hearing is that for later stage projects, the valuations are still quite depressed, so a significant drop to what they were before. But when you're in those early stage ones, the valuations are actually, what I'm hearing, looking quite frothy or sounding quite frothy. Some quite optimistic price tags in that part of the market. But again, it just points back to those areas that are really getting more interest. So things around tokenization, gaming, artificial intelligence, that big question of could it sort of lend digital identity? Would that be helpful in the AI world and a world where you've got sort of a giant proliferation of different image and content through generative AI? So yeah, certainly some of the different talking points here, but fundraising is certainly one to watch.
Okay, Bloomberg's Annabelle Droyle is on the ground at the Token 2049 conference in Singapore, keeping a finger on the pulse of the mood around the crypto space. Annabelle, thank you. There's plenty more coming up. We're going to break down where we stand in terms of expectations between economists and investors around where the Fed goes later, 25 or 50. And just a reminder of the restrictive nature of rates right now, certainly a case that Bill Dudley has been making. Stay with us. This is Bloomberg.
$25 or $50, it doesn't make a difference. I think that's the problem with the news cycle and all of this. They're losing sense of the bigger picture. 25 basis points is going to be would be the right thing to do if you look at the whole picture as a whole. If you look at the mortgage situation, which is worse and that affects more people, then it's probably 50 basis points.
All right, Bridgewater Associates' Ray Dalio speaking to us on the sidelines of the Milk and Asia Summit. 2550, he says that's a TV business news obsession, no one else's. JP Morgan's Jamie Dimon is saying, doesn't matter, 25 or 50. Maybe, chaps, that's because you don't have mortgages. I'm positing, but certainly if you have a mortgage, it matters, 25 or 50. But in terms of the split, there's a split between economists and there's a split between traders as to whether or not you go 25 or 50. If you care about the 25 or 50, economists overwhelmingly expect a smaller cut, 25 basis points, just 9 out of the numbers surveyed. 104, I should say, 9 expect 50, 104 expect 25 basis points. So again, the vast majority of economists expect just a 25 basis point cut. It's a very different view, though, coming through from traders. Let's flip the board and have a look at pricing, because you're effectively split 50-50 as to whether or not you go 25 or 50. Traders have adjusted, of course, over the last 7 days or so. Some of that has come down to what we've been hearing from the likes of Bill Dudley, formerly of the New York Fed, and others, some of it down to the Wall Street Journal reporting as well. But traders have upped their bets on 50. Economists, though, holding the line on 25. Just reflecting on where we are in this cycle and the fact that you've had a year now of rates set at the top end, 550, the effective rate, 550, 533 from the Federal Reserve. Let's flip the board and show you where we are on rates and the essential nature of the tightness that we're seeing. And this is something that Bill Dudley reflected on as well in terms of the tight nature of monetary policy right now. He makes the case, of course, that they should go 50 at this meeting. But this takes you back, of course, and shows where we are in the context of other hiking cycles, the highest rates that we've seen, of course, in about 2 decades. Coming up later, a Bloomberg surveillance special. The Fed decides. You can catch that 6:30 p.m. London time. That is one you do not want to miss. And tonight, Bloomberg is proud to celebrate the premiere of the 10th season of the David Rubenstein Show. Peer-to-peer conversations. It kicks off tonight, 6 p.m. London time, with the president and co-founder of Stripe, John Colissian. The opening trade is up next. We're going to be setting you up again with the details, the analysis around what to expect from this Federal Reserve. We have the statement that's going to be in focus, of course, the dot plots, the forecasts. We're going to bring you smart analysis on how to position, how to be thinking about this Federal Reserve. We also break the inflation data out of the UK. That drops in about 3 minutes' time and could tie into views around the BOE. The opening trade is up next. This is Bloomberg.